Hey everyone, my name is Jack. Welcome back to the channel. I cover a variety of topics as they relate to real estate, the markets, and pretty much everything as it has to do with personal finance. So if you like those sort of topics, be sure to have a look around the channel. And if you like what you see, be sure to subscribe. But today I want to talk about the insane wealth tax that California recently proposed earlier this month. But for those of you who haven't heard, the California Legislative Assembly has recently proposed and amended a bill that requires those with wealth above $15 million to pay a 0.4% wealth tax every single year, and including a retroactive period for 10 years where they'd have to pay this tax. In short, they're paying a tax on everything that they own, not just the income that they make, as most states and the federal government certainly do. And this is totally separate from property taxes as well, where real estate owners will have to pay a yearly tax to pay for their municipal services, as is very common and really, I think, universal throughout the United States. And here's the bill right here in case you didn't believe me, but you can see right here, 0.4% tax for those with wealth over $15 million, and it would apply for 10 years, even after you move out of the state, and it includes your offshore assets, your stocks, bonds, real estate, your partnership interests if you have a business that might not be publicly traded, and pretty much every single type of asset you could possibly think of. California wants to put it under this umbrella. California, which is already a relatively very high tax state, is starving for revenue because it has a lot of programs it needs to pay for, so it's looking for new ways to make money. So it is trying to do this. Now, this is just a bill sitting on their Capitol Hill, so nothing has been actually passed yet, but it has been floating around the legislature for a few months now. Now, before I go over my qualms with this outrageous bill, I do want to go over the potential constitutional issues with the retroactive portion of this tax, and that it can be applied for 10 years previously for those who've had wealth or built wealth in California, however they define that. But this potentially would be a due process issue. For those of you who don't know, the 5th and 14th Amendments protect your right to due process when it comes to the government trying to take away your life, liberty, or property. You are owed a due process of law if the government is going to be taking away any of these things, so it helps to protect your rights from the government coming in and being super totalitarian generally. The whole point is it tries to stop the government from doing things that are patently unfair without some sort of representation or your day in court. So in this case, someone could leave the state of California and still be paying taxes in California for something from 10 years ago, which is kind of crazy. So the tax is following them wherever they're going. That's where you start to get into some weird jurisdictional issues because California is trying to tax someone who's not actually in their state. Now, it seems that current case law would support a slightly retroactive tax or fee or restriction where maybe it applies a year prior, but this is a tax that would go back 10 years, which is much bigger than the little year or two that the court has found to be okay in the past. And the court I'm talking about here is the United States Supreme Court, since that would apply to all states. I haven't looked at California law, admittedly, so maybe there's something in there that I just haven't seen. There's an old case from the 1920s called Nichols versus Coolidge, where an estate tax was applied retroactively up to 12 years, and the court really didn't like that, and it says that the retroactive impact of something has to be limited, so that's really all they said. It's pretty vague, but it seems like this 10-year limit probably wouldn't cut it based on the prior precedent, but then again, that was 100 years ago or so, so not sure if precedent would change and the government would be okay with it now. We'll see what the court would do if this were ever to cross their table. So it's not 100% clear if all of this bill would even be constitutional. It's hard to say, but we'll see, and maybe California will try pushing their luck and do it anyways. But potential constitutionality issues aside, this tax is incredibly ridiculous. So California has recently seen an exodus of some of its celebrities, as it has for many years, including most recently Joe Rogan, who makes a lot of money, and he decided that he'd rather go to a state like Texas, which is very warm, like California, but it doesn't have a state income tax, and it doesn't have nearly as much red tape and everything like California currently has. But this issue really isn't that unique to California. There just happens to be a lot of rich people in California. But you're seeing this in my home state of Illinois. You're seeing it in New York, where people are leaving the state, especially rich people, to escape the regulatory red tape and also the very high tax climate and increasingly high tax climate against the rich. You're seeing them end up in places like Florida and Texas, which have no income tax and comparatively much lower taxes and regulations all around. Plus, they are warm weather states, since that is always a plus. Outside of the Sun Belt, states like Indiana have done well when it comes to population growth, since you have a neighboring state like Illinois, which has lots of people who are leaving and go right next door to Indiana. That's just another example of a comparatively low tax, low regulation state getting people leaving a very high tax, high regulation state with a poor economic outlook up ahead. The difference with California is they do have a pretty high, rich tax base, whereas in Illinois and New York, it's quickly drying up. Maybe California is next, and it seems like this bill would accelerate that process even quicker. Because if you had $15 million in wealth, you'd have to pay an additional $60,000 per year in taxes. And remember, this is wealth, not income. Income is completely different. That's already being taxed. Your wealth is ideally what produces your income. So if your wealth is being taxed, you're going to lose your income as well. And California is already a state where the top 1% of income earners in the state make about 25% of the taxable income, yet they pay 50% of the income tax in the entire state. So it's already very disproportionate to the amount of income they're making. Now you're adding this wealth tax on top of it. You just have more incentives to get out of there and find some other place that's just as warm and has good economic outlooks. And then all of a sudden you're saving maybe even $100,000, $200,000 more, depending on how wealthy you are, just on taxes. You would hope that you'd have a state that would foster growth and encourage innovation and want businesses to come to them. But California appears to be doing the exact opposite. Many wealthy people run businesses. They have interests in corporations, in partnerships. They start businesses all the time. Why on earth would you want to move to California to start a business and then pay this additional wealth tax with any gains that you make on it before you get to cash out anything? When on the flip side, you could just move to another state like Texas or something where you have way less red tape, way less taxes, and plenty of opportunity as well. All I can say is that if we have this bill passed, we're going to see an exodus of rich people from California at an even higher rate than what's currently going on, and that is not good for California's tax base, especially if they're trying to do this workaround. And I think California knows that. California knows that rich people are going to leave. That's why they have this retroactive thing attached to it. They're just deciding to burn all bridges and will try and get as much money out of people as possible in the next few years or in the next decade if this bill were to pass and that 10-year requirement actually was held to be constitutional. Because rather than finding a way to balance the budget, cut spending, all they're trying to do is target one particular group of people with a lot of money, and those people are just going to move. And when those rich people move and take all their money and opportunities and business with them, all the taxes are just going to be shifted right back down onto the 99%. And of course, there's always the slippery slope where the government will continue to lower the tax basis and make it to where it starts at 15 million, then it's 10 million, then it's 5, then it's 1, then it's 500,000, then it's 100,000, and then everyone's paying a wealth tax. And this isn't even to mention the cost of actually having to come and appraise all of these interests for non-marketable securities. So sure, you have a stock portfolio with publicly traded stocks, you know what it's worth right away. But if you have a partnership interest in a private partnership, which you can't necessarily sell an interest in, how on earth are you going to evaluate that? You're going to have to bring an appraiser out who's going to tell you what this business is worth. You're going to have to pay that appraiser a lot of money. So just the administration of this tax would be a nightmare, and it would be incentive enough for a rich person to leave because they don't want to have to deal with this hassle. They already deal with tons of expenses with preparing a complicated income tax return. Now you're adding this even more complicated wealth tax on top of it. It's just such a mess. Anyways, I don't want to go any longer on this. I really hope California comes to their senses and doesn't pass this ridiculous bill. It's going to do way more harm than good in the short term even, not just the long term. Anyways, that's all I've got for today. If you like this video, please like it since it helps the channel out a lot. And be sure to subscribe so you don't miss any of my new updates as I post new videos every single week. And of course, another reminder that the One Property Retirement, my new book, will be releasing on Friday, August 28th, just a couple days from now. So if you want to get a copy of that book, I have it available for pre-order right now, and I'll include a link in the description to go ahead and pick up a copy of that book. And of course, I would very much appreciate it if you could leave a review on Amazon once it actually does go live, since the more reviews I can get, the more people will be able to see the book. If you want to see a video going over what that book's about, I'll include a video in the description below, and you can check it out. It goes over some of the fundamentals of how to build a simple retirement strategy using real estate. But until next time, take care.